Hey guys, welcome back to Crypto Daily Analysis. So today what we're going to be talking about is the recent Bitcoin correction and what does it mean for the markets as a whole. So as we know, on September 7th, Bitcoin underwent a pretty large correction event. I mean, we actually went from a price of about 52 approaching a high of just under 53,000 all the way down. We wicked down to a low of 42,582. So we literally went down over $10,000 in one day. We didn't finish there. We closed the day on the 7th at around 47,000, and now we are trading at 46.3 at around 4 a.m. on September 9th. So, is this cause for panic? And I'm going to tell you why, at least at the time, I don't believe it is. So, as you can see, when we came down, the wick went all the way down to the 20-week moving average. Now, historically, that has actually been the level of support for a bull market. We can see back here when we were sort of starting this run, our most recent bull market run, the 20-week moving average, we came, once we came above it, then, we had these large tests of the 20 weeks. So, we went from 11,000 all the way down to, 98.22, and then just sort of consolidated for some time. Came down, back again, tested it again. And, once we had done that for several weeks, from September 3rd all the way until October 8th, then we took off. And, you can see this is a trend that holds true over multiple bull runs. So you can see back here, going all the way back to March 5th of 2016. Look how many tests of the 20-week moving average we had for weeks here, from March 6th all the way up until April 9th. We just bounced up and down off the 20-week. Then we got extended up to $783 and then crashed all the way back down to it, but we held it as support. And what did we do? We rode right along it for months until October 11th, and then we were off to the races again. And then, so as it's trending up, we came down, tested it again, and you can see we never closed below it. We wicked below it, but never closed below it, and that's the key. So we tested it here, so March 25th. Now, mind you, at this point, we had been doing this for over a year, coming down to the 20-week, bouncing off of it, going up, coming back down, bouncing off of it. Here we are again, July 16th, 2017, September 15th, 2017, until we hit our market peak, and then we crashed below it. Then you can see here, we had, several months of correction all the way down here. We came below the 20-week and the 200-day. And here we are. We came below it, tried to hold it as support, couldn't. Tried to go above it again, couldn't, and then that was it. And, we had several times where for just a few days. So look, we were above it for no more than 3 or 4 days here. We were above it for no more than 3 or 4 days here. Again, we tried one more time in July, maybe 5 or 6 days this time, but we just could not get above it. It came to it, bounced off of it, came to it, bounced off of it. Tried to get to it, couldn't, bounced down. And it wasn't until March 27th of 2019, so almost a full, year and a half, year and a quarter later, that we were able to finally get above it. And even then, you can see it was, we did get above it, and, no one can say that there weren't good returns to be had here. But once we got it and held above it for some time, we were able to go up nearly, not quite, but nearly 400%. So, this didn't set new all-time highs though. That's the key. And, something you'll notice here is we went above it, but we weren't able to come down and test it, it's sort of an important key that you need to focus on here. The fact that we didn't test it made it so that we were just too far above to continue to hold it as support, and that's why we came crashing back down below it. You can see here, then we got back above it again, held above it for some time, and the COVID capitulation event, we dropped all the way back down. But eventually we were able to get back above, and what was different this time? We got above, came down and tested it. Above, came down and tested it one more time, and then we were off to the races. And that was all the way until, May. We all know what happened in May. We came below. Here we are now. We got above. We tested it in the short term, came back down, another short-term test. Now we're above. We're coming down to test it again. So I think we're at a critical point now. And, only time is going to tell what happens here. I don't think that anyone can say one way or the other exactly where we're at. But we came down, we tested the 20-week here. We, depending on what exchange you're looking at, some of them got all the way down to the white line, which is the 20-week moving average. So now we're sort of sitting at the 200-day, holding that as support. But the key is going to be, can we come down and test the 20-week again? And that's going to be critical for the bull run. And, this isn't something that's just, this isn't unique to Bitcoin. You can see a similar type event across, equities, different commodities. This holds true across, many different asset classes. You want to see the asset come, test the 20-week, and then hold it as support. If we're able to hold as support, then, we're off to the races. If we crash below, then we're just going to need some more time. The market's not ready yet. We had a big correction here. We dropped, what was it, on the 15th? We closed below it, and, that's sort of key, is closing below it. You can wick below, but it's getting a day or two of closes below that, even a day or two, you'll probably be okay. If you get a weekly close below it, that's when you can sort of confirm that in all likelihood your bull market is coming to an end. So at the end of the day, think of it, this is a sign of strength if we're able to come down and test the 20-week. It's not something to panic and, go panic selling all your Bitcoin, all your altcoins. If Bitcoin is able to come down and test and keep going up, then we're all good. Otherwise, then, we could just need some more time, several months. It could even be longer than that. But the point is, don't panic. Let the market play out. Coming down to the 20-week is a sign of strength if we are able to hold. And, in my opinion, what we actually don't want to see is something like we had back here, where, we got above and just went above. This, we never tested here, and that's why once we came down, we weren't strong enough to hold it, so we had to, trend sideways for over a year. What is a better situation is if we can see it trend sideways while testing, hold it, and then go above. That's how we're gonna, get to the valuation of $100,000 Bitcoin that everyone talks about. $200,000 Bitcoin. I don't think $200,000 is coming in, this market cycle necessarily, but I think $100,000 is certainly a more reasonable figure to be looking at. But who knows? The second you think what's gonna happen, or you have an exact price in mind, that's when Bitcoin throws the curveball and does whatever it's gonna do, and it's never exactly what we predict. So all we can do is look at the data provided and act accordingly. So what we're hoping for is a test of the 20-week coming up. Now, the 20-week, it's going to, currently it's trending down within, the next month or so. Given that the prices sort of hold where they're at now, it should stabilize and then actually start to trend up if we're able to, hold these price levels or, go higher. If it comes down, then the 20-week will, within the next month or two, start to continue downward. But if we're able to hold, this price will flatten and we'll start moving up. And that's where we want to see the test. So yeah, that's it for today, guys. So if you like the content, like and subscribe, and I'll see you guys next time. Thanks.